Welcome to another episode of the Well Off Podcast. I interviewed Gary Hibbert, smart home choice, realtor and investor out in the Durham region. It was a really cool interview. I got to learn a lot about him that I didn't actually understand. So he was living paycheck to paycheck at one point, working a corporate job with TD Bank, and he ended up quitting his job at one point. He learned from Tom and Nick from Rockstar Real Estate how to do rent to owns, and he was able to build a portfolio that way. At this point now, he's got about 15 properties, so he liquidated some of his homes in order to have cash available to do private mortgages and basically live off the cash flow that his investments produce. So just to put it in perspective, you can get typically somewhere between 8 to 12% annual returns by loaning out money that you have access to, even if it's in RSPs as a mortgage. And in doing so, he can live off the funds that he's making. So just a really cool strategy. I never really heard of anyone doing it the way he described. And I think you're really going to enjoy this episode. So have a listen. Let me know what you think. Leave a comment. Leave a review on iTunes if you can. I would appreciate that. And as always, if you know anyone looking to invest, I'm specifically interested in working with beginner investors that are looking in Hamilton, maybe even like Brantford, Welland, or St. Catharines. I'd love to work with them. I do host property tours as well. So keep me in mind. Reach out to me directly if you know anyone. Maybe even give me their name and number, and I'll be happy to work with them. So thank you very much. Enjoy the show. Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. And today I'm here with Gary Hibbert, who's a full-time real estate investor, licensed and award-winning real estate agent, also an educator. In 2008, he made a decision that would be life-changing. He purchased his first investment property, and through hard work and dedication, he was able to leave the corporate world to become a full-time entrepreneur. Today, he has close to 30 investment properties, so we'll be diving into that. And just so you guys know, when Gary first started, he lived paycheck to paycheck, as many other people do. And through some of the decisions that he's made in the last couple of years, he's been able to transform his life. So, Gary, welcome to the show.
Hey, George, listen, thank you very much for having me on the show. Definitely excited to be here. Just in regards to the 30 properties that I own, so I've owned and operated 30 properties, but I'm actually down to around 15 or 16. So just in case anybody wants to do any fact-checking on me.
Okay, fair enough. So the way that I like to start off the show here is by asking you about your childhood. If you can just tell me about where you grew up and some of the things you remember as a child.
Oh, wow. We're going way back. Okay, yeah. Cool. So for childhood, I mean, I originally I was born in Toronto. From there, we moved out to Oshawa, lived there for about maybe 10 years or so, and then we moved to Curtis. And so I lived in Curtis for a number of years, and I hated it.
Okay.
Because it was like out in the middle of nowhere. Mm-hmm. And, I mean, things have changed now out in Curtis, but when I first moved out there, it was cows and farmers' fields and very, very rural. But you know what? Looking back at it, though, it was probably one of the best things I think that my parents did for me. Mm-hmm. Because it allowed me to use my imagination. I loved looking up at the stars, and I had a telescope. And it allowed me to really kind of just live in a very kind of a quiet, secluded environment. Mm-hmm. And when you look up at the stars at night, especially out in Curtis, because you don't get that city light, it really allows you to dream big. And that's what I was doing when I was out there. And so I think at an early age, late teens is when I really kind of got the inspiration that I really wanted to do something big with my life. Mm-hmm. The thing is that I ended up meeting my wife that I have today at around, I think it was like 19 or so.
Okay.
And then shortly afterwards we had our son, and so I had to now get the ball rolling with getting a good job because I was working at Canadian Tire back then, and I was able to get into TD Bank. And that was when I realized, because I'd always heard this before, but your network is how important it is. And so I'd handed out like tons of resumes, and I didn't get any jobs. But I went to a friend and asked him, and he was like, yeah, I just got into TD. I can get you in there. And he got me in.
Cool.
And, I got into the corporate world. And when you're in that corporate world, it's really hard to get out of it. And the paycheck was great, and it allowed us to, get our first condo or property in Toronto. But I got caught up in that whole rat race, and I was in it for a number of years, and I'd forgotten about the dreams that I had when I was younger.
Good. Yeah. Well, good for you for getting out of there at this point.
Yeah. I woke up eventually.
Yeah. I want to touch on something which is kind of like a sensitive topic, but I had a friend of mine who's also a realtor. She said that similar story. She grew up in Toronto, and then she moved out. I forget to what city. It was somewhere out rural. She was picked on a lot because she was black, basically. Yeah. And she would tell me all the stories of her like being the only black person in her grade or in her school. Was that something that you also experienced?
Yeah. There weren't many black people out where I was when I was in Curtis. And I remember when I went to high school, I think there was like one other black guy. That was there with me. But you know, but the good thing was that when I first moved out there, I used to play for a soccer team, and so some of the players that were on the team with me, they actually went to school in Curtis. So when I got there, I actually had some friends, which was good. So that kind of fostered a good relationship there. But I didn't really get picked on a whole lot because of my color. There was a couple things here and there, but it definitely wasn't anything where I'd say I was traumatized by it.
Right.
And then I think around maybe grade 11 or so, then it was like this influx of a number of different black families that moved in, and then we had like the best basketball team ever. we were dunking, we were going to OFSA, and all that. But there wasn't really a lot of I guess different ethnicities. Yeah,
but that's good to hear. That's props to Curtis for being that place that was good to people of different ethnicities.
Yeah, exactly. Awesome. So it was good.
Yeah, good to hear. Yep. Okay, so you told us a bit about your journey, having a good corporate job, working with TD Bank. I'm assuming at that point you were living paycheck to paycheck. Is that right?
Yeah, I was.
Yeah. So you bought your condo in Toronto.
Yep.
You have probably a fair-sized mortgage.
Yeah. Well, I mean, I guess at the time, but now I look back at it, the mortgage was like, 100 and I don't know, 10,000. We bought the condo for like 120. We put down 5%.
That's awesome.
Yeah, but it was still tight.
Yeah,
it was still tight.
Yeah,
I remember there was times where, we'd get home and it'd be like not much food left in the fridge. Yeah. My son would be like, in his last diaper, and like we'd go to the bank account and there'd be like there's no money in there. And back then we used to have overdraft. So we'd always be living in the red, like negative 200 or negative 300. And then I would go to the mailbox to get the mail, and there'd be like a GST check in there for like $87.50. And I'm like, oh, thank God. And that is literally how we lived for years. It was just always in the red. And even when I was at TD, because I remember when I first started, I was only making like I think 25 or 26. At the time, it was great money.
Yeah.
And then after that, I got a raise because I went into the operations department, and the raise was like almost 10,000. Like it was good money, and so I was climbing up fairly quickly.
Yeah.
But the weird thing was, it was still paycheck to paycheck.
Yeah.
It was a crazy thing, and I guess while we're on this subject as well too, is that I think what I didn't understand was the impact of inflation, and how it was so detrimental to to our incomes. Because inflation, even though you may see a particular number of it saying like 2.5% or 3%, when you really take a look at it and what some of the real numbers are, as far as I'm concerned, especially when you're living here in Toronto in the GTA, inflation is a lot higher than that, and it took a while for me to kind of figure that out.
Right. The situation that you were in, that comes from somewhere. There's a reason that you believe that that's how life was lived, that you would live paycheck to paycheck. Somewhere, somehow along the way, you saw that that's how most people are living, and you live that sort of lifestyle. Do you know where that came from for you?
What that paycheck to paycheck kind of lifestyle?
why you were living that lifestyle instead of living like how certain people live, saving money and investing and whatnot.
Yeah. I mean, look, I did have some savings, but it was the dorm. The dorm was, and at least what I was told when I was growing up, was to go to school, get an education, and get a good job. Nobody told me to invest in real estate. Yeah. I saw some of that stuff on television, but it was never really taught to me. So, to me, I thought that this was the way to do it, and I, through TD, they had some savings programs that you can, contribute to.
Mm-hmm.
And then I put a little bit into RSPs.
Right.
That's really what allowed me to buy the condo in the beginning with my wife, was we had put some money into RSPs. So,
Mm-hmm.
we did do some savings, but I knew that it wasn't going to be enough to retire on, I think, at a fairly early age.
Yeah, that's a scary thought. I just remember you hear that fairly early on, that you should save $1 million or whatever so you can retire on that. But for me, that never felt like that was a good thing to aim for.
Mm-hmm.
It just didn't make sense to work all my life and make all those sacrifices so I can have $1 million at the end to survive on.
Well, then, and then now, so you got $1 million at the end, and now you got to do a countdown with this money.
Yeah.
They're saying, okay, so I got $1 million, so this should last me for the next 15 years.
Right.
Right.
15 years, I hope I die by then.
Yeah, exactly, right?
Yeah.
And once, I think, at least for me, when I understood that, I was like, okay, well, hold on a second. What if people are living longer.
Mm-hmm.
What if I run out of money? And at the time, too, in the beginning, $1 million when you're in your early 20s seems like a whole lot of money.
And it was more money back then. You talked about inflation. $1 million 40 years from now, what's that really going to be worth?
Exactly. You got townhomes that are for over $1 million now. It's just, it's not enough.
Yeah.
It really isn't. So I would say for us, when I started to wake up was maybe around the age of 35. I don't know if we want to kind of jump into that now.
Yeah, sure.
Yeah. So here's what happened for me. And I'll kind of, I guess, share this story here. This is around maybe, say, 2007, 2008 actually is when it really happened.
Mm-hmm.
And one day I went into work. This is when the crash had just happened in the U.S.
Yeah.
And everybody was thinking that it was going to happen up here in Canada. But if you remember, it didn't. But it kind of did a bit of a sideways thing.
Mm-hmm.
And I went into work. It was a Monday. And what had happened then was that even though we didn't get hit with the real estate market, people were losing their jobs at that particular time because people were anticipating that it was going to happen. So Monday rolls around. I go into work, typical Monday, minding my own business, doing my own thing, and saw one of my friends get called into the to the manager's office, and he comes out, and he has the infamous pink slip, and I'm like, oh yeah, this shit's on. And so all day people were getting called into the office.
Wow. Yeah.
And I remember just banging on my keyboard harder, thinking that, if they see me working really hard, they're not going to let go of me,
Yeah.
But I mean, look, they already had the list. They knew who they were going to get rid of. And so the end of the day rolls around, and manager comes out and he goes, okay, so whoever's left here, you guys are safe. You don't have to worry about it. You guys have your jobs. And I remember driving home, and I said to myself, never again do I ever want to feel like somebody's in control of my financial freedom or future.
Mm-hmm.
The problem was I didn't know what to do. And I didn't know how to get out of this rat race, this corporate world. And so that is when I started trying a whole bunch of different things. So I started doing Forex trading, currency trading. I started doing commodity trading, buying wheat, oil, soya beans, all that stuff. Got into the stock markets. I actually took even a course on how to trade the stocks and all that. And while I was doing that, I just wasn't making any money. I was actually losing money. And so then I had to go into the bank, and this was the third time I'd gone into the bank to take all of my debt and put into my mortgage.
Wow.
And I was like, man, thank God I had a house, because if it wasn't for this home that I had owned, I didn't even know how I was going to get myself out of all this debt. And so now I'm sitting in the office, and my financial advisor says, okay, I'm going to go out and print these papers. And what we're going to do is we're going to put all your debt in here, and we're going to get rid of all your credit cards and all your lines of credit. I'm like, yeah, please do, because I don't want nothing to do with this stuff anymore. I'm done with it.
Yeah.
And so she leaves. And so this is a day that completely changed my whole entire life. So I'm sitting in there, and I look up on the wall, and I see the index chart. And I don't know if you've ever seen the index chart, but it's a chart where it shows you what the stock market has done for the last 50 years and what interest rates have done for the last 50 years. And that chart, I saw inflation. And I looked at it, I'm like, wow, so over the last 50 years, inflation has done anywhere from 2 to 3% to as high as 14, 15%, even higher. And then I took a quick calculation of my raise that I got last year at work. I think it was $1,000 or something. And I was like, well, hold on a second. This raise is 1.6%. And if at minimum inflation is doing 2.5%, 3% a year, I get it. It is mathematically impossible to outpace inflation by having a job.
Yeah.
And I was like, well, what if I have one or two of these properties? How could that potentially change my whole life? And that was when everything really opened up for me. And I was like, okay, I need to get into real estate. Like, I don't. It's almost like the Matrix, that red pill, blue pill. You know, once you see it, you can't unsee it, or once you learn it, you can't unlearn it.
Yeah, that was the first time that you ever thought about owning real estate. That moment.
No.
Well, owning rental real estate, I should say.
I'd actually, so let's rewind a little bit. I actually thought about it back in 2001. And there was a friend of mine at work that had an investment property. And so I went to him and said, hey, look, I'm thinking about maybe getting into real estate investing. And I know you have a property. Should I? And he's like, no, don't do it. It's like risky. Your tenants are going to destroy your home. And it is definitely 100% not worth it. And I'm like, really? He goes, yeah, don't do it. I'm thinking about selling mine. And so I went home and I told my wife about it. And I said, yeah, man, like a friend at work told me not to do it. This is way too risky. And then the next day I went back into work. I'm like, thank you so much for talking me out of it. He's like, listen, don't worry about it, man. That's what friends are for.
Yeah, well, that's a lesson to not listen to certain people, right? Like, you got to be really careful about who you take advice from.
Absolutely. Yeah, for sure, right? You want to take advice from people that are in it, that are doing it, as opposed to people that are not in it.
Or people who are doing it incorrectly.
Yeah, absolutely.
Like him, probably, right?
Yeah, exactly. Yeah. That's what it was. He was just doing it incorrectly. He was just kind of doing it on his own. He didn't have any, formal training, or he wasn't going to like real estate investment groups. And I mean, look, I get it. Back then, there wasn't really a whole lot of that out there either, right? But yeah, it was just he learned it on his own. Yeah, and made, I'm sure, tons of mistakes.
Definitely. And do you know where he's at today? Have you been in touch with him at all?
I know he's still at TD.
Oh wow.
Yeah. So he's still there.
Does he still have that property, or he got?
I don't know.
He should ask.
I hope he does.
Yeah. Well, I'm sure his opinion would be different now if he still has it.
Yeah.
Right.
Yeah.
Yeah. So just a little side note: the first time that I ever thought about real estate investing, I think my mom had mentioned it.
Okay.
She said, "Did you know that you can buy a rental property, have tenants pay for all of the expenses, and basically own it as an investment and have it grow over time?"
Right.
And then I just thought, no way. Are you serious? You can actually do that? Like, the tenants will cover everything?
Yeah.
All of the payments? And then just that was probably when I was like 15 or 16 years old. And just a bunch of time went by. I didn't do anything about it. But when I think back, I wish I had bought something when I was like 16, 17, 18 at some point in that.
Yeah.
That would have been really awesome.
Oh, for sure.
But everyone says that, right?
Yeah. And you know what that kind of reminds me of, too? Now I'm thinking back to it. I'll be honest with you. The first time I really heard about it was my dad. I remember my dad always talking about it.
Yeah.
But he wasn't talking about it in regards to buying real estate, like a property. He was like, man, if I had some money, I'd buy some land. Mm-hmm. And so that early concept of like, okay, there's something maybe potentially in land, because he's seeing it going up and up and up and up.
Yeah.
But I didn't. It was just more of like, okay, cool, I understand there's something there, but I just didn't know what to do, and neither did my dad.
Right.
Right?
Yeah.
Because like, if I had money, I'd buy land. And he'd say that like every few years. Mm-hmm. So I think that kind of stuck with me.
There's always, if, then I would. Mm-hmm. There's always that, but there's always a way.
Yes.
Yeah, it's incredible. Like, it's just the mindset.
It is.
That's something that it just keeps coming up over and over. What's your mindset towards real estate, and how has that shifted over the last couple of years?
My mindset towards real estate. I mean, look, I think it's more my mindset towards life. Mm-hmm. I think if you have the right mindset, that can allow you to do pretty much anything you want. Mm-hmm. You know, I've now come to the understanding and realization that life is just an abundance. But you have to know how to get it. And through mindset is, I think, the most effective way to understand that we're all capable of doing pretty much anything that we want. Mm-hmm. I did an interview with Les Brown, probably one of the highlights of my life.
You actually interviewed him?
Yeah, I interviewed him.
Crazy.
Yeah. So I interviewed him about maybe 2 months ago.
Wow.
That was part of the reason why I ended up moving over to that brokerage as well, too, because he kind of dangled this carrot in front of me and said, hey, look, if you come over, we got Les Brown coming to do a talk to our group. I mean, that wasn't the only thing. There was a lot of other things. I think the fit was really good. Yeah. And I was like, I get to interview Les Brown. And so, I did a podcast with him. Probably one of the highlights of my life, one of the scariest things I've actually kind of went through.
Cool.
And he said that 85% is mindset, 15% is skill set. And I truly believe that. I think it might even be higher, honestly. You know, the skill set stuff, I've heard some people even say that, you know, you really don't even need the skill set. You just need the mindset, and the skills will come along afterwards, right? But that's one of the first things that I tell anybody that's getting into real estate investing is get the mindset stuff. Understand that, you know, I was just talking to somebody on the way here, and she's like, I want to get into real estate investing. I don't know if I have the income to do it. But I heard you talk a lot about this mindset stuff, and it feels like if I get the right mindset, I can do this. I'm like, absolutely, you can.
Yeah.
And she's like, okay, well, I need to meet with you. I'm like, yeah, sure, let's do this. I enjoy helping other people figure out how they can either do it, whether it's mine or whether it's real estate investing, but at least understand that there's always a way to do it. There's lots of people that have gotten into it where they don't have the money or they don't have the credit or right. Is it hard work? If you don't have it, 100% it is. But you can do it.
Yeah, I agree with you. And the thing that I realized recently, I've been talking to, I spoke to 2 potential investor coaches, which you probably know them. And I just mentioned to them, like, I'm looking to buy 5 properties next year. So that's my goal. And what do you guys think? And both of them are like, oh, really? That's all you're aiming for? Like, they didn't say it like that, but that's the message that they said. And I don't have a boatload of cash to do it, but they're just saying, if you learn how to raise capital, then that's an easy task for you to do. You're just missing that little piece. So again, it's just mindset to believe that you can raise the capital. You don't need to have everything at your disposal right now, but you can figure it out and you can get there. Yeah.
Mindset, and then also too, I don't want people thinking that it's just wishful thinking. There's also a lot of hard work that goes along with it as well too, right? You know, a lot of people will say, "Oh, well, you know, I've gotten to the point now where you're lucky," and luck is really just when preparation meets opportunity.
Right.
And so, the harder I work, the luckier I can become.
Yeah.
Right. And so here's one of the things that I always try to tell people to do, and I do this today, is in my office. As soon as I walk in, there's a whiteboard, and it has pretty much everything that I want for the year. All my personal stuff on one side, and all the business stuff on the other side. And I remember the first year I did that. It might have been the second year. Anyways, I wrote down that I wanted 4 investment properties. And I was like, I don't know if I can really do this, but let me just write it down anyways. And at the end of the year, I had 4 investment properties. And I was like, I get it. It doesn't have anything to do with money. It's really the mindset, number 1. Number 2, getting really good, like what you said earlier, on raising capital. And so I got really good in understanding that there's more than enough money out there. I just have to learn how to become attractive in a mindset way, so that people would then believe in me and want to then say, okay, well, yeah, here's my money. And then I create this win-win scenario with them for investment property is going to help myself and help them and their family as well too. Yeah,
exactly. So since we're kind of on this topic, can you tell us how you went from the 1 condo in Toronto to at one point 30 properties down to about 15 now?
Yeah. So how that happened was, so we had the condo in Toronto. Then from there we moved to Ajax, bought a townhouse out there, and then from the townhouse we stayed there for about 3 years, and we outgrew that really fast. And then we had our second child, and then we bought a detached home, and that really kind of stretched us to the limit. You know, it was a detached home. We bought it for like $296 or something like that, and at that time that was super expensive. You know, we didn't know how we were going to afford it, and then. Coming into 2008 now, here's what I did. And everybody at work thought I was silly for doing this. And even at the time, too, when I did, I thought I was maybe a little silly as well, too. But if you remember, they came up with a 40-year amortization. And I think we had maybe, 10 or 12 years left to pay on our home. And we'd be almost mortgage-free. Probably wouldn't have, because we'd probably put ourselves in more debt and then increase our mortgage. But that's where we were. And then we put our mortgage up to 40-year amortization. And so then our payments went down really low. And so we looked really good on paper. And then we were able to buy another investment, or our first investment property in Oshawa for like $200,000.
Okay.
And then from there, we found an investment group. learned from them on how to invest in real estate, which was Tom and Nick Karatza. So so I do owe a lot to them because they taught me a ton.
I had no idea that you had that connection to them.
Yeah. So when I started investing and learning from them, I think they had just left their full-time jobs as well.
Right, which was about 10 years ago, right?
Yeah, I think they're maybe like 12.
Yeah,
or
something like that.
Yeah. And that's where I kind of learned the concept of rent to own.
Mm-hmm.
And then from there, I started doing rent to owns, and I was talking to a lot of friends and family. And then what I started doing was I was bringing my friends and family into my home at our dinner table and doing a presentation and showing them, here's what I'm doing. Do you guys want to partner with me? Here's what I'm doing. And I was doing this every month.
Cool.
And that was when I was really kind of starting to sharpen up my skills on how to do presentations and talk to people. And every time I was nervous and I was sweating.
On your own dinner table.
Yeah, I was a mess. But it was getting me out of my comfort zone. And then we started a company called Rent to Own Today, and bringing in tenants that way. And then I would either partner with friends, family, or sometimes even coworkers. And that was really how I grew my portfolio, was through rent to own. And then I got to the point where I had enough cash flow coming in that it covered my mortgage payments. And I was like, okay, that's when I kind of got the balls to say, okay, I'm going to leave TD. I didn't have enough money to maybe feed the family, but I was like, well, my neighbors are pretty cool, so maybe they'll give us some food and flour and stuff. And I can make some dumpling or whatever. But that was it. And so I wrote that down. I was like, once we have enough money coming in to cover our mortgage payments, I'm going to make that leap of faith.
Takes the pressure off. You're like semi-financially free, almost there.
Right.
Yeah.
And so that was, and again, I think it all comes down to just writing down what you want and then just going after it. But that was really how I did it, was through rent to own.
Right.
That was a large piece of the pie.
Very cool. And it's cool to see that Nick and Tom were able to help you transform your life.
Yeah.
And I'm sure that's kind of part of your life now. You were mentioning that lady that contacted you and said she wants to be an investor. How have you been able to help others along the way?
So the way that we've been able to help others is we've got a company called Smart Home Choice. We started that back in 2010. And Smart Home Choice is a real estate education company, I'll call it, where what we do is we mentor and coach beginning real estate investors through an avenue of different things. So we'll do like a mastermind class. We'll bring out different guest speakers who are experts in real estate investing. Then we have a class, like a fast start class that kind of repeats every month, where it's like, real estate investing 101. Then we'll do property tours. And we do webinars. So it's all education based. So I don't really tell anybody to go on this particular type of investing. It's just, here's the different types of investing, whether it's single family or the BRRRR strategy. And I don't know the audience that you have that's listening, but a BRRRR essentially is taking a single family home, convert into a 2-unit, which they call buy, renovate, rent, refinance, repeat.
And it's applicable to anything, really. It could be done on commercial properties, could be done on single family homes.
Yeah, exactly. And so that's essentially what we've created. And then one of the things that we recently did this year is we've taken out a couple of the mastermind classes because we were doing like 8 a year, so we've dropped it down to 5 now. And part of it was just because it was just getting a little too much. Because I was doing the podcast, I'm part owner now of a brokerage. We have a lending company, so there's so many moving pieces that I said, okay, out of those 8 events, let's take 3 of them and let's start doing social events. Kind of like to have a good time too. So then what we do now is we take our clients and our investors, like we did like a Niagara trip this summer.
Cool.
And just hang out and have a good time there. And we went bowling, and then we've got a brewery tour that's coming up at a nice restaurant in Whitby. So we find by doing that as well too, allows us to have fun, but also allows the investors to kind of take them out of the education piece and just start to kind of just unwind a little bit and have a drink. And we're finding that some of them are doing joint ventures with each other now.
Oh, cool.
Yeah. So that's kind of what we've kind of created, like this nice little community of investors and clients that like hanging out with each other now.
Yeah, very cool. So it's education based. You're giving people the tools to go out there and invest, and you're also a realtor, so you can help people by kind of guiding them through the whole process.
Exactly.
Yeah, and so today, what are you focusing on? What type of investments?
Yeah, good question. So last year, and I think when you invest in real estate for a number of years, you feel like there's like just a bit of a progression, right? So when I first started, I did the BRRRR strategy, even though I didn't even know what the BRRRR strategy was.
Right.
I hated it, and it was just because I just wasn't educated on real estate investing and what to do properly. Step back, then I got into rent to own. Loved that, mastered that, did that for about 4 or 5 years.
Mm-hmm.
Then I revisited the BRRRR strategy just because of the prices, and I do a lot of investing in Durham and Peterborough. The prices were starting to climb up, and so it was getting harder now for these single-family homes to work and for rent to own. So then I revisited the BRRRR strategy, and then we started teaching our investors on how to do the BRRRR strategy, and a lot of them love it. And then it made sense now for me to now go do multifamilies, 4 units, 6 units, 10, maybe 20, 30.
Mm-hmm.
And so I took a course on that, and me and my wife did it together. And then I called up a good friend of mine, Casey Wong. And yeah.
It's a big investor there.
Oh, yeah. Yeah. And so he took us around and showed us a number of his investments. And I was like, man, I don't know if I like this tenant profile. Not knocking the strategy.
Mm-hmm.
It was just like, I wonder if this is right for us. My wife wasn't really liking it. But I was like, but this is what we got to do. Mm-hmm. This is what all investors do. We have to get to 100 doors. Right?
Yeah.
And so we went to a Christmas party for Butler Mortgages, and Dave was a huge mentor of mine as well, too.
Another kind of rock star connection.
Yeah. And I told him what I was thinking of doing. He goes, yeah, well, that's one way of doing it. And I'm like, well, what's the other way of doing it? And he goes, well, what about private lending? Like, why don't you become the bank? Mm-hmm. And then the more I looked into it, the more it was starting to make sense. And I was like, yeah, why do I need all these doors? I don't. Because if I've created the wealth, I don't have to sell them all off. I can sell a few off. And start kind of focusing more on the cash flow, because so I think sometimes you start taking a look at, well, now I need more doors because I need more cash flow, but it's really hard to scale it to get that much cash flow. Yes, I've seen some investors do it, but where I was, it was going to be difficult to scale it to get to, say, if I wanted 10,000 or 20,000 a month coming in. And so that's what we're primarily focusing on right now is private lending for us personally.
Right. So you're kind of at the stage now where you're trying to pay off some of these properties so that you can live from the cash flow. Is that right?
It's not even pay it off, just sell some of them.
Yeah.
I'll sell some of them. So whether it's a right or wrong strategy, it's just it's what's going to work for us.
And are you using the sales proceeds to just spend on your everyday living, or are you using the sales proceeds to pay off whatever remaining balance you have on the other ones?
No. So what we're going to do right now is we'll probably take the cash from some of these properties, put them into some of these private funds.
Oh, got it.
Right. So either a first or second mortgage.
Yep.
Get the cash flow coming in, which then allows me to free up some of my time to continue doing what you're doing today, which is I love doing podcasts, and also the coaching and the mentoring aspect of it. I love that. And also now in the brokerage, we've got about 60 or 70 realtors there. And so now I'm dedicating some time to coach them as well, too. Yeah. To show them the importance of real estate investing. So the cool thing now, I'm bringing in Smart Home Choice into this brokerage. So it's this brokerage now that has this investment arm. And so it's to also teach these realtors to say, hey, look, you have clients, but there's a huge piece that you're missing.
Right.
Because you've helped them buy a home. Now go back a few years later and help them now to build wealth.
Right.
Right. And so to do that is really what is going to allow me to do the free up time.
Yeah.
Right. So again, is it a right or wrong strategy? It's really what suits your lifestyle. Exactly. I think that's the most important piece that I really want people to understand. That there's no right or wrong.
Yeah, you don't have to compete with anyone. You don't have to do what anyone else is doing.
Right.
If they want 200 doors, then that's up to
Absolutely.
them. But that might not be right for your life.
Correct. And so that was a huge eye opener for me earlier this year, where I was like, I need to get to that many doors. And I was like, no, I don't. I don't need to do that. I need to really take a look at what's on my vision board on what it
Yeah.
is that I really want to do.
Exactly.
And so this now frees up time. Because look, at the end of the day, it's all about time, right? Because we all have a set amount of time, but you can have an infinite amount of money. And so now I'm just trading the money that I've created for time to do what I want to do.
Right. And you're just using your assets in a different way. So you're selling off some of these properties, but you're doing private mortgages. So you're probably getting, I'm assuming, somewhere between 8 to 12% annual returns.
Yeah, anywhere between.
It could be higher if it's a
some of them are
mortgage.
higher. Yeah, some of them are higher. Right.
And then you can use some of those funds to live off of, basically. So it's actually quite a pretty smart strategy. I haven't really heard of anyone so far that I've interviewed saying that that's what they've done.
Yeah. And so now that can create that cash flow of $10,000 a month. Yes, I'm not building wealth. Yes, I'm not getting the appreciation. Yes, I'm not getting the mortgage pay down. But right now for me, it's the cash flow.
Right.
And that's what I want. And I think if you really break it down, that's kind of what most people do want.
Yeah.
Because I can't eat equity, but I can eat cash flow.
Yeah.
Right?
So why did you choose to go down the private mortgage path rather than use those funds to pay off your properties and then use the rental portion of the rental income as your cash flow? Would that just have taken too much time?
No. And that's, that's a really good question. The reason why I think we decided to do it was because we started another company called Deep Pockets, which is a lending company. And so what we also wanted to do was like, yes, we can invest in it ourselves. Because I'd like to, if I'm going to start a company and tell people how to invest in a certain product, I want to do it myself. And so what that did was allowed us to do it ourselves. And then, because I'd like to learn by doing. And so by doing it, now I can bring other investors and say, hey, look, this is what we're doing as well. So for any strategy that I've ever done, I've always done it first, and then I brought other people in.
Got it.
So I didn't want to just do that route because I also wanted to start this other company. So I was like, okay, I'll go into this company. It's like I'm not only the what is it? I'm not only the president, but no, what was that saying there? That I'm not only the president, but I'm also a client or something.
Yeah,
I can't remember something like
about
that.
The Biggie line?
No, it wasn't the Biggie line. It was the hair club thing or whatever.
I remember it was in a Biggie song.
Was it? Okay.
I think it's I'm not only a client, I'm the president, something like that.
Yeah. Okay. Well, I got it wrong, anyways. But
all right, cool.
All right.
So why don't we jump into the next section?
Yeah.
Unless there's anything else you want to add on this topic prior to moving on.
No, it's cool. We can move on.
Okay, cool. So this is the random 5. I'm going to ask you 5 random questions. And You're just going to tell me the first thing that comes to mind. Can you describe your morning routine? So yesterday, or actually the last 2 days, I was at a conference and I got to meet or see Hal Elrod speak, who's the author of The Miracle Morning. I don't know. Have you ever heard of the book? No. Okay, so he broke down a really good morning routine, so I thought I'd ask you about yours, and if you can tell me what that's like.
Yeah. So look, I'm going to be as honest as I can here on this question. My morning routine changes from time to time.
Okay.
So some mornings I wake up and I have my cup of coffee, and I'll just watch kind of like what's happening in the world, in the news, because I do find that intriguing. So it's almost kind of like entertainment for me. There's other mornings where I wake up and I go to the gym. And I don't listen to music, but I listen to podcasts. And I find that really motivates me, and that allows me to come up with some ideas for upcoming topics, upcoming videos that I may do, or anything else that I need inspiration from. And so throughout the week, it's different. I don't keep it the same. But I'm usually up by, I would say, around anywhere between 6 and 7 o'clock in the morning. I like to wake up early, and I like to enjoy the whole day.
Yeah.
But the very first thing that I do when I sit down at my desk is I look at my whiteboard, and then I have my agenda in front of me, and I write down what I'm going to do for that week. So I'm very big on designing my day and my week. And emails, I look at it from time to time, but I don't focus on it because those are just other things that other people want me to do. And so if it's outside of what's in my agenda, that is taking me off track of my goals, because the agenda ties very close to what's on my whiteboard.
Right. And that's the highest priority.
Yes.
Exactly.
Yep.
Exactly. Okay, perfect. What's your most fulfilling and largest goal? Although those could be two
I would
different
say,
things.
here's what it is for me. I've created a year now where, because a lot of people focus on retiring.
Yeah.
I do mini retirements, and so I retire in July and August, and I retire in December and Jan.
Cool. What are you doing then?
Vacations, spending time with the family, just really doing whatever it is I want to do. Sometimes I like to binge and watch some Netflix shows, catch up on it, because the other time of the year I'm super busy. I'm busy. I've decided that I want to live a life to help serve other people, and that's what I like to do during those times, because I don't think there's anything higher than that. If you really strip away everything in life, like the money and everything else, I think the ultimate high is to serve as many people as you can. And so that is what I've tried to do and dedicate my life to help other people during those times. And then when it's my time, I need to now kind of go into that mini retirement, relax, spend time with the family, and just enjoy life, whatever it is that I want to do.
So on that topic, what is your family, what do they think of where you're at and what you've been able to build?
In regards to my kids, or
even like if you have siblings or if you have parents that are still around.
Yeah. There's a lot of people, I think family and friends, that have seen what I do. Not all of them have moved over into what I do. I think it's a very small handful that have. And the rest see it. They don't either know exactly what I do. And I don't know if they really want to do what I do. So it's not a negative or a positive thing. It's just, when I first started going down this road, I was like, I'm going to try and help as many people as I can. And I've realized that you can't. So now I just try to be a beacon. And if they want to see or learn more about what I'm doing, then I'll always be here to help them.
Right.
And so my kids closely see what I do, and they love it. My daughter is maybe a little bit more involved in it, but my son isn't. And that's fine. I've always told all of them, like, whatever it is that you want to do, it's your life. You live it to your fullest potential. And so he's a welder. He's a little bit more of an introvert, we'll say. And that's fine, but he loves it.
Yeah.
And so if he loves it, then I love the fact that he's enjoying that aspect of his life. Where my daughter, on the other hand, she's like really big on, she wants to get a rental property, and then she wants to rent out the other rooms to other students. And so, and her cousin works for me, so she does the admin. She's like 18.
Okay.
And she's getting a real estate license. So they're very driven, and they really want to go down this path of real estate investing.
Cool.
So it's a mix. There's people that like what I do, and they come over and they want to learn from it, and other people just, I think, kind of just observe and see what I do, because I do quite a bit of things on, post on social media.
Yeah.
So I'm not scared to kind of put my lifestyle out there.
Right.
And I think you'll notice too, in the summertime, I'm always at the cottage. I love the cottage, because here's what the cottage does for me. It allows me to reconnect with friends again. So I enjoy that. It allows me to kind of put the phone aside, except for selfies. And but that's kind of like the time that I love reconnecting with people again. I think it's really important.
Very cool. Very cool. Okay, who is your favorite athlete of all time?
Oh, wow. You know what? My brother-in-law. So when I was younger, I used to play soccer. I played it professionally.
Really?
Yeah.
Cool.
At the rep level. I didn't say professionally. I wasn't going overseas, but I was going to the U.S. I was going to the U.S. So I did play rep soccer, so I enjoyed it.
Okay.
But in regards to athlete, my brother-in-law got me into basketball a couple years ago. I really didn't watch sports all that much, but I love the Raptors now.
Yeah.
I loved Kawhi, and he left us, and he broke my heart. But if I had to pick a favorite athlete, man, I think Jordan. Just because of his story of how he didn't make it on the basketball team, and then he kept trying, and eventually he perfected it and got really good and became, I think, a symbol of what is possible. And I mean, even today, he doesn't even play, and people know who he is.
Oh, yeah.
It's just incredible. And just that symbol on the shoe, it just shows determination and what you can do with your life.
Yeah, he's mega superstar, like probably the biggest name in basketball. Yeah, most likely, right?
Yeah, it's incredible.
Very cool. And the last question, what success principle do you live by?
Work hard, play hard.
Yeah, the cottage, right?
That's it. Yeah.
Cottage
work hard,
vacations,
play hard. Yeah, when I'm working, when I'm in work mode, I'm at top of my game. It's hard to take me off of it because I'm determined.
Mm-hmm.
I hate losing, but I do like the lessons that come from it.
Right.
And then when it's playtime, I love to enjoy it. I like the what life has to offer because there's just so much. Being around friends and family, I enjoy that.
Mm-hmm. Awesome. Yeah. Okay, great. So you shared a lot of great things here. Before we end things, do you want to talk about some of the services you offer and who should reach out to you and how?
Yeah. So look, there's a lot of different services that we offer. Smart Home Choice is an education company. So if you want to get into real estate investing, we do a lot out in the Durham region and Peterborough. We're doing a lot in Peterborough. I would say probably like 80-90% of our business is moving into Peterborough. The numbers make sense, and infrastructure and vacancy and job growth. So we like that area. Mm-hmm. So that's Smart Home Choice, which is real estate investing. Then we have Deep Pockets. So for some people who are thinking about getting a real estate investor, but maybe they're a little bit nervous and want to taste a little bit of it, that's like a private lending company where we do first and second mortgages. And some people who are investing in real estate kind of want to get a mix as well, too, where they diversify within real estate. So that allows our investors to do that or clients to do that. Then I own the brokerage, part owner of a brokerage out in Oshawa. So if you're a realtor and you're in the Durham market and you want to learn a little bit more about real estate investing within a brokerage, so we offer that service as well. And like I mentioned before earlier, I do podcasts. So if you want to follow me on that as well too, I enjoy it. It's called Real Talk with Gary, wealth, health, and everything in between. Because I don't know where I want to take this podcast yet. I know I want to talk about wealth and health. Yeah. And maybe one of my kind of mentors that I look up to right now doing podcasts is Joe Rogan. I love his show. So who knows? Maybe I might have some scotch on the table one day, and people can come in. and
a couple of joints and stuff.
Yeah, well, I don't know if I'll go that far. But just to liven it up a little bit, right? So, cool. So that's kind of what are some of the services that I offer.
Very good. And how do people reach you?
So they can reach me. I think by email is probably the best. So Gary, GARY, at smarthomechoice.ca.
Awesome. Great. Well, thanks again for coming. I know you had a long drive, so I appreciate your time.
Yeah, no problem.
And looking forward to staying in touch.
All right. Sounds good, George. Listen, thank you very much. I really appreciate this. It was a good time hanging out with you.
Anytime.
All right.
Thanks for listening to this episode. I hope you enjoyed the content. And as a valued listener, I'm giving away a sample letter of intent. This letter is used once your potential co-venturer expresses interest in working with you. It outlines the general structure of the deal and intentions of both parties. You could visit www.welloff.ca/letter to receive your free copy. www.welloff.ca/letter.